So the biggest risk to crypto right now is something I bet you've never even thought about and have never seen it coming. And I guarantee you by the end of this video, I will prove that. I actually got this information as an urgent warning from Julian Bridgen, one of the most legendary macro analysts in the world. He put out an emergency report on Real Vision to put this on our radar. And I think, as always, the risks that exist to crypto come from outside crypto, and we don't see them coming. And this financial world is so complicated, it's hard to understand. So I'll stop beating around the bush and I'll tell you, the biggest risk to crypto right now is currency devaluation, but specifically the relationship between the Japanese yen and the US dollar and how that's affecting the tech markets and how the tech markets would affect crypto. Okay, so let's get into it. This trade is called the Japanese yen carry trade. And the idea behind it is that the Japanese central bank has kept interest rates low for a very long period of time. So you could borrow money for very low interest, sometimes for free. Sometimes they would even pay you to borrow money from them in yen. So what a lot of large institutional investors did is they went to Japan, borrowed a ton of yen, turned it into dollars, and then invested the dollars into the stock market, especially the tech part of the stock market, into the NASDAQ. So this is the idea, that you go and borrow yen from the Japanese central bank and Japanese banks, and then you invest it in dollars. Now, if you can borrow at 0% or 1% and you can invest it at 5, 7, 10, 12%, whatever you get in dollars, that's a great trade. What that does require, though, is that the Japanese yen doesn't get devalued against the US dollar too much, right? Because if the Japanese yen, it takes you more and more Japanese yen to pay back that loan, it eventually gets to a certain point where you're not making enough money in dollars to cover how much the Japanese yen is becoming worthless over time, because eventually you'll have to sell your dollars, you'll have to sell your assets, sell your dollars, convert it into Japanese yen, and pay that back in yen, right? If this is getting a little complicated, trust me, it is complicated, but the idea is there's so much money that's been borrowed in yen, that's been converted into dollars, that's in the tech boom that we've seen, that now the Japanese yen has been effectively devaluing against the dollar, right? So the Japanese yen keeps going up. And an interesting thing happened right around this level, the 160 level. When we hit that in April, the Japanese central bank freaked out and started printing a bunch of money to try to save their currency, because they don't want their currency to become worthless this quickly. So what they do is they then start dumping US dollars and US dollar debt, and then buying Japanese yen with it to support that process. Now, right around then, the US actually called the Japanese central bank a currency manipulator and got mad at them and said, don't do that. So they printed a bunch of money, saved the Japanese yen, but then over time, the market has slowly pushed up towards that level. Now we went above that level, and then we had another massive round of money printing, yen printing, to make this come back. The risk is that as we get back to these levels, it's very likely that as the tech bubble slows down, like we're seeing it slow down now, investors aren't making insane returns to justify staying in that trade. When the yen goes back to being more as worthless as it was very recently, it goes up here basically, at that point, those investors would sell. These are institutional investors. They would sell and they would convert back to yen and pay back their debts. In that process, like Julian says, it's the escalator up and elevator shaft down trade. So it takes a long time to build up, and then it just instantly waterfalls down. Because as some investors start to sell, others will start to sell. So this currency devaluation stage and this dynamic is something that we haven't seen in the previous bull markets. And that is, I think, going to be the biggest risk to crypto coming up. Now, the question always is, what should I do about it? Well, watch it, let it play out. For me personally, I'm letting it play out. I'm sitting in US dollars and not other currencies. And when it actually happens and that the elevator shaft, crypto in the markets fall down the elevator shaft, the next thing to do is buy it up, because that's going to be an excuse to print a ton of money, like Japan's already doing. So I told you there's going to be a new risk. It's completely unforeseen, because what happens is when the currency meltdowns happen in the currency markets, that's the biggest ocean. That then affects the stock market, because people are selling stocks to cover their losses on the currencies. The stock market is the NASDAQ, the tech stocks. As the tech stocks drop, that then has a knock-on effect in crypto, as people sell their crypto and tech stocks to cover their losses. And this is being done at such a massive scale, nobody even knows how much is in there. So when that happens, watch out below.